Good day, subscribers. Thank you so much for joining us today. My name is Margot, and welcome to Wall Street Watchers channel, where we love highlighting breakout stocks, bringing you insights into some of the biggest movers on the market, and of course, discussing the catalysts for these momentum plays. And since we are known for giving you, our loyal subscribers, first mover advantage on some truly undiscovered gems, today, we'll be discussing one of those gems, a microcap stock called Slinger, trading under the ticker symbol SLBG on the OTCQB. And as always, we definitely like to give you a summary right up front. And in this case, we believe Slinger is going to become a major leader in artificial intelligence and connected sports space. And in this video, we are going to tell you why. So stick around for all those details if you like, and we'll also include some helpful links in the description below, so be sure to check those out as well. Now, for starters, we first discovered Slinger when it was trading for just under 40 cents, and amazingly enough, SLBG hit an all-time high of $6.24, which was an almost 1,600% increase. Now, you could definitely say that's an impressive gain, but the more impressive part of their story is that SLBG is a unique company for a couple of different reasons. Now, most penny stocks don't have established businesses or significant revenues, and Slinger, however, seems to be an exception to that. So, to give you a little background and history about this company, it started off as a Kickstarter campaign to develop a tennis ball launcher that actually doubles as a sports bag. And as the campaign progressed, the company validated its proof of concept through a crowdfunding campaign, which generated, by the way, over $1 million in crowdfunded revenues. And this made it the largest crowdfunded sports campaign ever on Kickstarter and Indiegogo. So the company then went on to produce the hit Slinger Bag product, and they also hired Mike Belardi, who is the former CEO of Prince and Wilson, which are two of the largest tennis brands in the world. And since then, the results have been super impressive, to say the least. I mean, just in a year of operations, right, the company sold over $11 million worth of Slinger bags. They signed a handful of endorsement agreements with top athletes and secured global distribution contracts in over 60 countries worth a retail value of over $250 million. So it literally came as no surprise to anyone that the stock had such a parabolic rise after a year like that. Here's where we think there is still a whole lot of untapped value remaining in Slinger. So I'm going to give you our 3 points to consider here, and then I'm going to explain each of these in more detail. So first, there's the Nasdaq uplisting. Then there's other sports verticals. And third, what I'm most excited about is Slinger is truly disrupting the sports and tech industry with artificial intelligence and sports betting. So with uplisting, Slinger has recently announced that it plans to uplist on the Nasdaq, and they have filed an S-1 registration statement to raise $25 million. Now, obviously, I don't have to tell you how super exciting that is, but I am going to tell you why. See, companies that trade on OTC usually live and die there, and they don't graduate to a national exchange, right? Now, for one thing, the qualifications to get onto the Nasdaq are pretty steep, and most small penny stocks won't meet those qualifications. So that right there says a lot about Slinger, and the company has experienced major overnight success with their core business, which effectively has enabled them to meet what seems to be all of the qualifications to get onto this national market tier. Okay, now what does that mean for current shareholders? Well, it means liquidity. And it also means stock price appreciation, plus a whole lot of institutional exposure. So that being said, getting into a stock before it uplists to the Nasdaq is kind of like holding a winning lottery ticket. Okay, so I also mentioned other ball sports. Now, tennis is Slinger's flagship product, but it by no means seems to be where it ends. I mean, Slinger has already disclosed that it plans to enter the pickleball, paddleball tennis, baseball, softball, and cricket markets in the coming years. And this is super exciting because if Slinger's success in tennis is any indicator of what the company can do to disrupt other ball sports, then this can be a golden opportunity. The tennis market is north of $10 billion, but just imagine how big the baseball, cricket, and other sports markets are combined. So it's really encouraging to see the company is already prototyping products in other sports verticals, and they're thinking about how to expand beyond tennis. Now, the third untapped value to keep in mind is the area that we are most excited about here at Wall Street Watchers, and that's connected sports, AI, and sports betting. So, the exciting thing is, Slinger has repositioned itself from a sports hardware business to become a connected sports company that is focused on industry-changing software. And in the last month or so, the company has announced a whole series of acquisitions, from a SaaS tennis platform with over 1 million users and 30 million bookings to an award-winning artificial intelligence company to finally Slinger's largest acquisition to date, a company named PlaySite. So, Slinger announced that it entered into an agreement to buy PlaySite for over $82 million in an all-share deal. Now, PlaySite, by the way, is an Israeli sports tech company that has totally disrupted the space with its cutting-edge tech, namely its AI, its visual learning, deep data analysis, automated video production, and live streaming. And guess who backed PlaySite? VC giants SoftBank and Verizon Ventures. So how is that for impressive? My gosh! And with Slinger's global distribution in over 60 countries, combined with Mike Belardi, who is leading the way for a global commercialization of the PlaySite tech, it is because of these key factors that we believe Slinger is going to become a major leader in the connected sports space. Now, that being said, where do we think the upside is in SLBG? Well, here are some comparables just to give you an idea. First, Genius Sports, which was a big SPAC deal this past year, has a sports betting data business, and that's exactly one of the spaces that PlaySite and GameFace, now Slinger subsidiaries, are playing in. DraftKings, the SPAC darling, is now valued at $20 billion. So this gives you a sense of Slinger's consumer-centric business model and all of the adoption Slinger already has. Okay, now imagine how much that can accelerate given its recent PlaySite and GameFace acquisitions. So if Slinger, as a sports betting data provider, goes to even 1/10 the value of DraftKings, that's a $2 billion market cap, and that would effectively see the stock appreciate in value 16 times, or $48 per share. Then another relevant comparable is Peloton, the connected fitness company. Now, with Slinger's repositioning as a connected sports company and its recent AI and smart tech acquisitions that are springboarding it to become a leader in this space, it is not hard to see how Slinger can become the Peloton of sports. Peloton is currently trading at a $16 billion market cap. So that being said, at 1/10 of that, Slinger would be valued at $1.6 billion, or 13 times what it currently trades at, which would bring its stock price to $40. Now, in all fairness, these are pretty conservative estimates given the revenue opportunities that Slinger has ahead and the market's, appetite for consumer-focused businesses with disruptive technologies. So we will continue to watch Slinger and update you, our loyal subscribers, on how we see the upside potential playing out. So if you're new to the channel, be sure to subscribe and hit that bell if you want to stay up to date on Slinger and all of our other picks, as well as get the most up-to-date reviews of undiscovered gems on Wall Street that are driving the biggest returns. And as always, make sure you do your own research and safe investing to all. Thanks so much for watching. I will see you next time.